Let's welcome Ms. Peggy Mark, our Head and CIO of Managed Accounts, who will be leading the panel discussion. Hi, Peggy.
Hi, hello. Good afternoon, everyone. Ladies and gentlemen, thank you for spending your afternoon with us today. We are very glad to have you come back to join us. Okay, my name is Peggy Mark. I'm the moderator for the panel discussion. We are delighted to have some distinguished guests who are experts in their own fields to share their views with us. Let me introduce them to you. Of course, first we have Mr. Tay Kian Yong, who just give us a very interesting overview of the Malaysian market. Mr. Tay is a senior analyst with Kenaga Investment Bank. He has a total of 17 years experience in equity research. Before this, he had also worked at other research houses. He has a Master of Finance with a BBA with distinction from RMIT University. He covers the power, utilities, gaming, and Petronas related stocks. And also with us today is Ms. Tirada Chan Yong. Okay, Ms. Tirada is an equity strategist for Phillip Securities Thailand since 2004. She takes a top-down investment approach to look for investment teams and then constantly updates the institution and as well as individual investors about the Thai market and of course the macroeconomic outlook. Before Phillip Securities, he had been with CIMB Thai Bank investment department for more than 3 years. Ms. Tirada is an MBA graduate from the Chulalongkorn University, one of the Thailand's top MBA schools. And also very happy to have with us our representative from Indonesia office, Mr. Kunawan Sutanto. Okay, Pak Sutanto is a director at Phillip Financial Indonesia. He joined the Phillip family in 2011 as a research analyst. He's now heading the equity research team since 2013. He's also in the investment committee board for Phillip Asset Management and has been appointed a commissioner in 2017. Within the Phillip family, he's also involved in conducting investment seminars and courses for clients and speaking at major market capital seminars events in Indonesia in collaboration with the Indonesian Stock Exchange. And of course, last but not least, we have our Paul Chew from the Singapore Research Office. Paul is our head of research with more than 20 years of experience as a fund manager and a sell-side analyst. During his time as fund manager, he has managed multiple funds and mandates, including capital guarantee, dividend income, renewable energy, single market, and regional focused funds. Paul has graduated from Monash University, has completed his Chartered Financial Analyst and Australian CPA program. Okay, before further ado, I'll go straight into the topic for discussion. The topics we have today, we would like to discuss today is what do accommodative monetary policy and fiscal stimulus mean for you as an investor during a worldwide pandemic. Okay, I will probably take ask the ladies first. Ms. Tirada, maybe we would like to hear from you. Like in your own country, in Thailand, what were the adjustments made to the monetary policy, and also the fiscal packages that have been introduced to cope with the COVID-19?
Yes, thank you for having me. For our situation for the COVID-19, in the beginning of this year, our government and also our central banks have announced a lot of measures to cope with the situations. For the monetary sides, we have the assistance measures divided into about 2 or 3 groups. First one is the interest rate cut, definitely, and also the second one is the liquidity injection, and the last one is the bank measures. For the interest rate cut, we have our monetary policy committee full-time since the beginning of this year, and 3 out of 4 they decided to cut the interest rates to its all-time low now, only at 0.5%. That is the all-time low, as I mentioned. Even we face this with the global economic crisis in 2008, the lowest interest rate at that time is 1.25%. So this time is reflected how severe impact to our economies in Thailand now. And the second measures is the liquidity injections. The Bank of Thailand, they gave the soft loan through the commercial banks to give the loan to SME, to help the SME, which was the group that impact quite a lot on the COVID-19 situation with the lockdown measure or everything. So they give the credit line for the SME and with the concessional interest rate at 2% per annum, and also give the interest free for the first 6 months. There's a grace period for them. And also the central bank also set up a corporate bond stabilization fund called BSF worth around 400 billion baht to add the liquidity to the bond market. Because the situation, the COVID-19, the lockdown all over the country, that makes they suffer, people they suffer, and they're willing to redeem all the investment to hold cash. So they have the panic on our bond markets. So they set up the BSF fund to help to calm the market down. The last but not least is the bank measures. They just asked our financial institutions to reduce the ceiling interest rates for the credit card, for personal loan, auto title loan, high purchase, and mortgage loan. And also, on the other hand, double the credit line for the good debtors who want additional loans at the moment. And also, on the other side, for the ones who has already been the NPL, they set up the debt clinic for them to restructure the unsecured bad loan, and also delay the assets confiscation process for them. That is all for the monetary policy, I think, for since the beginning of this year. But on the fiscal packages that the government gave to the COVID-19, there is worth more around $30 billion, or accounting for around 8% of our total GDP. Certainly, they gave the tax measures for us to extend the personal and corporate income tax filing deadline to help people to delay the payments, and also have the measures on the household support, the labor support, and business support, like they hand out the money aid to people for the informal worker and the vulnerable group, such as the children, elderly people, or the handicapped. They gave 500 baht a month for 3 months for the informal worker that lose their job, and also the vulnerable group, they gave 1,000 baht a month for 3 months as well, for help them to have the money to spend. And they also have the cutting the electricity and water charge for the household. And in the labor support, they announced to reduce the monthly contribution to the Social Security Fund by both employer and employees for 3 months. And also to encourage people to stay home, work at home, measures to go active. They asked the mobile phone operators to give us the special packages to register for 10 free gigabytes of data for 30 days, as well as 100 minutes of free voice call as a part of public assistance during the outbreak. But the most important measures, I think, from the fiscal packages, I think is something about the tourism stimulus packages that government just gave us, was combined 22 billion baht for these 4 months during July to October. We call the project We Travel Together, because the situation of the COVID-19 in Thailand, it seemed so far so good. for our infected people, we have no domestic transmission case for over 40 days consecutively. So this is quite good. So the government start to think about the boost in domestic tourism. So they gave the projects called We Travel Together. By the government will subsidy 40% of the air ticket for the hotel's room, and also give the discount coupon for restaurant and tourist attractions for people to encourage their traveling. And also they gave the subsidies for 2 million domestic. For another package is the 2-day study trip for 1.2 million village health volunteer group with a subsidy of 1,200 baht per person. So I think this is the most important measure at the moment from the fiscal package. So I think that is all for now.
Okay. Thank you very much, Ms. Tirada.
Yeah.
Okay, thanks. That was very comprehensive. Yes. Can I move on to Pak Gunawan? Pak, can you share with us what are the monetary policies and fiscal packages that has been put in place in Indonesia?
Yeah, okay. Our central bank in Indonesia still aims to maintain the USD IDR exchange rate stability. And in March, the Bank of Indonesia cut the FX reserve requirement ratio for commercial banks from 8% to 4%. They also cut the rupiah reserve rate requirement by 50 basis points. And this is especially for banks that finance export, imports, and that finance SMEs. And additionally, they also expand the types of underlying transactions for foreign investors to hedge against the rupiah. So those are the few measures that are noticeable from our central bank in Indonesia. Fiscal-wise, the government aim to maintain the purchasing power. Some noticeable stimulus packages that recently rolled out the housing subsidy of around 800 billion rupiah, or equal to about 55 million rupiah US dollar, and also the subsidy on housing down payments of around 700 billion rupiah. Governments also give assistance to local governments, especially those affected by lower tax revenues. The grant is quite sizable. It's about 3.3 trillion rupiah, or about 227 million US dollar. In terms of income taxes, there are some measures also from the government. For example, medical devices manufacturers, taxpayers are given tax incentive in the form of reduction of 30% of the cost incurred to produce medical devices. And the healthcare workers who work on COVID-19 cases are granted incentive of not having to pay income taxes on salaries. In addition, also the listed companies in Indonesia are given tax incentive of a reduced income tax, corporate income tax of 19% for the fiscal year 2020 to 2021. But there's some terms of and conditions to the last incentive that these listed companies has to have at least 40% of shares outstanding in the market. And additionally, they have to also buy back the shares from the market to qualify for the 19% corporate income tax. So those are basically some of the probably the most noticeable monetary and fiscal stimulus packages that have been recently rolled out by the government and the central bank in Indonesia.
Thank you very much, Pak. Okay, Mr. Tay, on Malaysia, you gave us a brief run through of the measures that has been rolled out. Can we just briefly have some idea, where do you see, which are the sectors that you think will benefit from these packages, and if they are benefiting in what way?
I think okay. You see, when like just now I say is that there's a 6 months that the borrower doesn't need to repay. That is an increase in their household income. That money is actually big bulk is going to the market, the equity market. I think during a lockdown, you've got nothing to do, so they just go into the market and you cannot go to casino. So I think they probably find this is a better way to make money than the casino. We see actually what sector is going to benefit. Definitely those stocks that have such the glove stocks. And that actually all the broker, I believe the upcoming result will be very strong because like just I mentioned that there's a record high of new signing of different accounts. Yeah, and I think beside that we also see because during the lockdown you will see a lot of food delivery. Those those plastic and packaging company will benefit also. And bear in mind that during the periods the oil price have plunged. So their raising costs are much lower, whereas the demands are rising. So this is one of the beneficiary from other than the growth actually.
Okay.
Yeah.
Okay. Okay. Can I go on to Paul? Paul, could you tell us which sectors do you think will be the beneficiaries from this COVID-19? Or the measures that has been put in place in Singapore?
Okay, I guess the direct beneficiaries have been all the healthcare related, like that was mentioned earlier, glove and grocery shopping. Of course, the grocery shopping for this quarter, probably April and May is probably up about 50% year on year. So we have bonanza for grocery shopping. Then for, of course, the gloves, we know what's happening. Then overall healthcare spend maybe on I don't know disposable vitamins, so that also improved. But apart from that, it will be a lot on the e-commerce where it's not very well represented in Singapore. So those are the beneficiaries. And of course, the lower indirectly will be the low interest rates. Then of course that will help REITs and so forth. That's just broadly speaking. Yeah. But pure direct beneficiaries, not that many in Singapore.
Okay, thank you. Thanks, Paul. What about Miss Tirada? You described a lot about all these handouts, this to boost the tourism, to boost the household utilities bills and all the soft loans. Where do you see who are the sectors you think will be benefiting from these packages?
Yes, actually, I think it seems like other countries that the first beneficiary for the situations and all the measures may be the retails. As I mentioned, the measures is almost all the give the money aid for the household and all the people for the first step. So they will see the basic consumptions rise, like the food, or they have the panic buy for the food related product before the lockdown. And during the lockdown, it seemed like other countries, the online delivery increased quite much. And also for the product that product related to the health safety, I think like the alcohol gels, face masks, the rubber gloves or something like this, they have the panic buy. So the retail sector may benefit from the situations. And I'll mention a little bit about the bank. Bank actually is the sector that have the benefit and also negative impact from the measures that government gave. For the first hand, I think when the government gave the soft loan through the bank, so that means they'll have the very low cost to help the people, especially the SME. So they have the brought down the financial cost in the banking industry for short term. And it's also lowered its loan loss provisions burdens, because the debtor defaults during this time, they may not consider or not classified as a non-performing loan during the outbreak. So just a short-term benefits for bank sector, I think, but for longer term, I think they have other issues following from the situation as well. And the last sector that I think it's benefits is the ICT, because the data usage among the customer and of the major mobile operators in Thailand surged quite a lot during the lockdown period. They encourage people to work from home. So that would be 2 or 3 sectors that benefits from the measures.
Earlier on, you mentioned they were given also mobile phone subsidies, right? And in terms of free minutes, is this subsidized by the government, or is it out of the pocket from the telco?
No, actually, they asked for out of the pocket of the telco, but I think they gave the free for a limited of usage. But in actually, when we work from home, we need so much more data usage than that. So I think that the operator benefits from the situations as well.
Okay, so that is a positive for them.
Yes.
Yeah. Thank you. Okay, maybe you can move on to Pak Gunawan. Maybe you can tell us how you see which sectors you think will be benefiting from these all these measures being put in place.
Okay, I think there are some similarities with what's happening in Singapore and Thailand, just now explained by Mr. Paul and Mr. Rada. So in the ICT sector, we also expect to see an increase in data usage, especially starting from the second Q result onwards, as more employees work from home and use video conferencing for meetings and so on. And the second sector that may benefit from this situation is the medical supplies and ethanol manufacturers. Because ethanol is used in a wide variety of products, including sanitizers and alcohol spray and everything. And we see that these two sectors can lead. But similar to Singapore, in Indonesia, we also have e-commerce shopping apps that unfortunately is not well represented in the Indonesia Stock Exchange yet. So those are private companies, but they should benefit a lot because people order shoppings from home and people don't go out to shopping centers. That being said, the heavily affected sectors would be brick and mortar retailers. We can see in Indonesian, especially in Jakarta, the malls are very quiet now, despite that the government already allowed malls to reopen. But we see that there's not many visitors in those shops, and a lot of local retail outlets are also struggling with cash flows. So likewise in the real estate sector is probably the most heavily affected, particularly the high-rise building or commercial building like offices and so on, because there are some companies also, they expect that the new normal will continue, and they probably wouldn't want to rent a lot of office space anymore. And probably the new model of how they operate the business is that some workers will probably work from home to continue work from home, and they probably would reduce the square meters of the office rent. Other sectors that we can mention is probably hotels and restaurants are directly impacted by this COVID-19 situation in Indonesia.
Thank you. So, Mr. Tay, maybe which are the sectors you think in the Malaysian market that we shouldn't touch for the time being? They will lack the recovery. They will take a longer time to come back.
I think basically, okay, the stocks is going to, or the sector is going to take longer time probably when you're talking about gaming itself, the casino probably will take some time compared to the NFO. That you probably see the immediate recovery in the earnings. Other than that, I think property, even though that it is our overweight, like just now I mentioned, because due to valuation is very cheap, but the economy is bad, their sales is going to be bad as well. Yes, governments have released, the cap earlier on, your third property, the loan cap from 17% to actually they have removed. So it's up to the bank to gauge whether they want to increase to 90% as compared to the first and second. So I think that is probably positive for the developer, but whether that will translate into sales or not, that's another thing. So basically, that's what we think that these two that probably you have to be mindful. Other than that, I think the beverage it will be recurring. This is essentials products that everyone's needed. Other than that, I think the automotive. The 3-month lockdowns, actually the sales are very bad. Some even go to zero, but now slowly pick up. But again, if the economy is not so good, then probably they will take some time to recover. So these are not factors that immediately you can see the recovery. Yeah, that's what.
Earlier on, you talked about a loan moratorium at the banks. You seems to be concerned about credit quality after this moratorium is lifted. Is that the case?
Okay, basically, you see, this 6 months actually to save them from. There are lots that probably are not not the fixed salary worker. Some are probably really wages. So when it's locked down, they have no income at all. So they may not pay. So this 6 months actually is save them from go into trouble. So as the market have reopened, then I think we have to see for now, because that 6 months is from April to September. So now we are in July. We still got 3 more months, full 3 months. If the reopen is good, then hopefully it's okay. So I think that will be the test. After October, then we will see whether are we going to trouble or we can negotiate. Yeah.
Okay, thank you. So maybe just one last question for the panelists before I move on to the Q&A. If at this situation, at current situation, where would you put your money? Where would you position your investment? Say your top 3 ideas. Maybe I start with Ms. Tirada.
Yes. Okay. As I mentioned earlier, that the situations in Thailand about the COVID-19 is quite impressive at the moment. So I would focus on the domestic play more than the global play right now. So I think some sectors that may benefit, healthcare is one of them. I think because that this outbreak that create the idea of healthy concerns quite a lot. So when the situation come back, I think healthcare is something gains the benefits from these situations. The people that think about the healthcare much more, and also ICT sectors and the retails, as I mentioned, that they have the less impact from these situations. And also I will put some money on the dividend play as the volatility in the stock market is quite high at the moment, especially the uncertainty in the global front about the COVID-19. We still worried about the second wave in the US or something like this. So they may check the market sometimes. So I think the dividend play with high yields, regular payments would be the good choice for the investor to put the money on to balance their returns for the portfolio.
Yes. Thank you. Yeah. What about Pak Kunawan? Where will you put your money?
Well, in terms of asset classes, we are overweight on bonds more than equity at the moment, because we expect the lower GDP will translate into lower interest rate in the coming months. And as such, we can see perhaps more capital gains upside for bonds prices. For example, in the last 5 months, the Indonesian composite bonds index has been up about 18% compared to Jakarta Composite Index, which has been down more than 20% since the COVID-19 started in early this year. Nevertheless, when we look at equity, we also see some further upside in telco, as we mentioned before, and also in the healthcare, especially those with that produce medical, not devices, but medical supplies. And in the manufacturing sector, we favor those that produce chemicals such as ethanol for the coming the rest of the remaining year. For equity valuation, we see that due to earnings uncertainty at the moment, especially this year, it could lead to difficulties in earning forecasts for Indonesian companies. As such, we prefer to look at the price to book ratio of the Indonesian stocks. The average of price to book right now for the JCI is about 1.7 times. And our forecast for this year for the Jakarta Composite Index, our base case is at 5970, and our bull case is 6,500, while our worst case is 4,240, around the area. So those are the way we see that we prefer bonds composition more than equity at the moment. But equity has also some opportunities in telco, medical supplies, and chemical. Real estate, we don't really favor real estate at the moment. That's probably one of the most lagging sector that we see will underperform in the coming months.
Okay. Yeah. Okay. Thank you. Okay. So Paul, so where's the best place to put your money?
Sorry, you're referring to me, is that right?
Yeah. Yes. Yeah.
Oh, okay. From the Singapore context, I guess will be stocks that have very dominant market share, but has been maybe sold down because of COVID-19 worries. So I think maybe there's a bit of mispricing whereby you're pricing these stocks when the earnings have been impacted by this pandemic. So you like mentioned earlier, like a Thai Bev or even building materials in Singapore, like BRC or Pan United, where their market shares can be 40 to 80 to 90%, but just that they've been sold down due to this pandemic. So that will be one area of opportunity. Then the next mispricing we think is probably some of the foreign REITs that are listed here in Singapore, the European or even the US REITs, where there's a bit of fear because there's always some home biasness, and these are new REITs, so people are not clear how they're going to perform in the current COVID environment. So some of these REITs can give you 7-8% yield on the US dollar. So that could be another area of opportunity. In general, yeah. Thanks.
Okay. Yeah. Thank you. Thanks, Paul. So Mr. Tay, so where would you put your money in this kind of environment right now?
In this uncertain time, I think we will look at stock with good dividend yield, like the NFO, B-Toto, the consumer stock like the FNN. We're looking at stocks that with regulated incomes, such as Tenaga and this Malakoff, which they pay not only, the valuation is not only cheap, and also because of their yield. And we are looking at the high beta stocks, so those cyclical, the constructions when the government need the pump price. So this is the sectors that is going to benefit, going to benefit it. And beside that also tech, this high cyclical. And of course, glove stock for now, even those that you have jumped up a lot, so I think there are still some upside to go. I think there are many questions were asked that the share price had up like Supermax 5 times whether it still can go or not. I think we can get a better picture when the upcoming result you will see whether they still shows the type of strong result or not. They have retraced a bit earlier on, but I think this week they hit new high again. So I think probably by next month you should see when the result when they announce the second quarter's result, you will see, because the first quarter result, even that lockdown is just for 2 weeks in Malaysia. And the pandemic started in February, I think. When it turned into the pandemic, it's only in February. But you really see a very strong result in Top Glove, you see in Supermax. So I think this coming quarter, you will give you a better picture of whether they're worth the money or not at this kind of price. Yeah.
Okay. Yeah. Thank you. Let me just move on quickly to the questions from the audience. Yeah, you're right. There are a lot of questions on gloves. There's one addressed to Ms. Tirada. She says, let me read it out. It says, 3Q2020 gloves had jumped over 80% from IPO price. Do you think it's overvalued? What are your top picks for Thai stocks?
Yes, first of all, I would say that our analysts haven't covered this stock yet, but I think the stock is just coming in the right time, because between the COVID outbreak, the sentiment helped to boost the market. The stock price quite a lot, as you mentioned, 80% up over the IPO price. Despite a very impressive earning this year, I think the share price has already priced in. Also, I would say it's quite a bit overvalued right now for this year's. But I think in the futures, if the markets just find or looking for the next year's values for the earnings, maybe they have the expanding for the capacities, and the analysts may revise the variations up. So right now, still expensive for this year. And for the questions about what is our stock pick, would be related to our domestic play, as I mentioned, which the major sectors that we would put our money on. So in the healthcare, as I mentioned, our best pick right now is the CHG. They is the mid-cap hospital chains operators in Thailand. They quite have a diversifications for the healthcare service to both self-paying, to social securities group, and the universal healthcare scheme patients. The patient traffic has gradually increased as our expected. So we rate this as our top pick right now, with the fair price around 2.7 baht per share. And for retail sectors, our top pick is the CPO, our top convenience store in Thailand under the brand of 7-Eleven. And they quite have the character of defensive during the time of uncertainty a lot. And so I think it's quite the situation quite benefit to the stock. And the last one, we pick ICT group. We pick Advance. It's the biggest mobile phone operators in Thailand, and they also have the sense of the dividend play, because they maintain the consistent dividend payouts twice a year, with the dividend payout ratio not less than 70% of the net profits. So we can get around 3 to 4% dividend yield every year from Advance. So we pick it, our best pick from ICT sectors. For other dividend play, maybe in property sectors like the land and house, we can get the dividend yield around 5%. This from the property sector, but with the sectors, it may be still impact for the economic front. So still have not a good outlook for the property sector right now. But if you can put it or hold it for longer and get the dividend during the way, this is one of the choice that we think is good.
Okay, thank you for that. Yeah, there's one very good question I saw can read here. Is to all the panelists. Assume that COVID is largely under control in the future. Is there any idea or trend that is largely overlooked by the market currently? Maybe you can start with Mr. Tay. What do you think will be something that the market has not talked about or never think about right now? That might.
Okay. What markets have been overlooked? I think because market actually now is just looking at those growth stock, I mean in Malaysia itself, what they have overlooked, like just now I did mention in my presentation, Tenaga. This stock has been overlooked for many, many years because then everyone is always thought that you will be doing a national service, which I think is not the case because since the ICPT frameworks that have implemented in 2017, they've been shown quite consistent earnings. And they that also, how to say, from earnings, you also can tell is actually governments really honors their promise, which means that because all this year the governments have been trying to reduce the subsidies. So you can see from 2017 onwards, the consumer have to share the cost. So there's a few pass-through in the mechanisms whereby you'll be shared by, not as a share by, it's transferred to the end user. But previously, yes, the cost is shared by Tenaga, shared by the government, shared by the Petronas. But now there's no longer a case. And yet, I think market is still thinks that they need to subsidize whenever cost is higher, this and that, which I don't think is the case. Yeah, I think this is the stocks that I think the market is hugely overlooked by the market, and it had been underperformed for many, many years.
Okay, thank you. Paul, do you have any idea where in Singapore, which are the idea or trend that could the market has overlooked? When COVID is over, the sector should outperform?
Okay, I guess it's probably the same that I mentioned earlier. I still think it's probably the foreign REITs that are listed in Singapore. I think just that there's a lot of unfamiliarity. People are not familiar with how they're going to perform under COVID. And once they've been stress tested, once this whole COVID episode is over and they've been stress tested, I think they could get a re-rating as people get comfortable. They have been able to manage even a pandemic. Their dividends can kind of hold or even drop only marginally.
Okay, thank you. Pak Gunawan, what do you think is the one idea or one trend in the Indonesian market that has been overlooked?
If we think about an overlooked sector, I think it would be crude palm oil sector in Indonesia because it has been so many months. People, investors in Indonesia and overseas forget about the palm oil sector. The government is still committed to realizing the biodiesel program. So to add palm oil into fuel. And recently we have seen a 2 or 3 months increase in the demand for biofuel, especially from the coal sector. So the coal mining, coal mining companies use some of the biofuel for their operations. So in this case, if we say that everybody is looking at the COVID-19 condition right now, one sector that is overlooked, I think, would be the crude palm oil sector.
Yeah. Okay. Thank you. Okay, maybe round it up for us is Ms. Tirada. Where do you think is the sector in Indonesia in Thailand that could come back quickly if the COVID is under control?
Yes, if COVID under control, I think we still overlook on the tourism especially for the airport for Thailand, because in the past records, we think they prove a lot about the recovery in tourism sectors. When the COVID-19 is have the certain state or the vaccine, the confidence will come back and the tourists will come back certainly. But right now, it seems it's hard to sell the idea to buy the tourism. Even we have the measures from the government, but mainly they focus on the domestic traveling. But I think when the situation is okay around the world, the international tourism will boost the sectors and go up rapidly. So we recommend the AOT, our international airport.
Okay, thank you very much, our panelists. Yeah, I'm sorry, there's still quite a number of questions, but we can't answer them because our time is up to pass it on to our Hong Kong and China speaker. Thank you everyone for Mr. Tay, Ms. Tirada, Pak Gunawan, and Paul for joining us today. Your insightful sharing has been very, very useful. We hope to be able to invite you again for our next session. And thanks again everyone for joining us. Thank you.
Yes, thank you.
Thank you.
Yep, thank you, Miss